In our next problem, we will find on the final exam as well as to the class a typical income statement problem, and it might be set up similar to what you have here, company A and B, and you need to compare and do basic income statements. This is very important in the financial arena as you have uh, companies being compared and evaluated to other competitors as well as other assets to invest. So this first question would be, company A and B have different approaches to selling glassware. So let's say these were two public companies selling glassware. You were able to look at two financial statements through their Form 10K or 10Q that you found on the SEC.gov website, and the financial statements would say, the numbers would be different, but the idea is how they would be uh, how they would be evaluated, and the evaluation could be a number of different ways, not just numbers, but in terms of how they account for their policies. So, for instance, you might have accounting policies that are significantly different, and they might uh, accrue expenses differently, revenue differently. You might accrue, various parts of the business, intangibles, amortize them differently, those type of things. So here you want to compare these two companies just on basic income statement items. So this is a pretty straightforward, easy question for you. Many of you should be able to determine this with ease because you've had your basic accounting. So that is a prerequisite. So what we want to do is, given the following information, 1692 per glass for company A, 1194 per glass for company B, in terms of revenue per unit. And then you have, let's say company A has sold more units or less units than company B, so you need to basically get the full revenue and basically create a full income statement, finding the gross profit, the EBIT, earnings before interest and taxes, and taxable income, and operating cash flow. Operating cash flow, it shouldn't be new to you, but it's definitely very important in the world of finance, especially cash flows. That's how many companies are valued. So this is what you're starting with. And so all I did is put it into a Excel worksheet. So let me show you that, if I can. There we go. So we have that. So what I did is, you're given that, let's see, cost per unit, fixed cost, and all I did was create an income statement. So first of all, you want to have revenue. And how do you get revenue? You basically do the units sold per glass. So I got 1692 per unit, and I sold 847,600 units. So I just did an Excel formula here. You can say D8 through times D9. Did the same thing over here for company B. Revenue is number of units sold times the price I received. Cost of goods, simply the cost per unit times the units. You can see that. D12 times D9. There's H, number of units, 1,389,300 times the cost to make each unit. That gives me cost of goods sold. Pretty straightforward. The gross profit, all I'm doing is taking revenue minus cost of profits, or cost of goods sold. Revenue minus cost of goods sold gives me a gross profit. Simply, if I compare the two, company A has a higher gross margin. You will see this again on the exams. Fixed costs, they really don't change. I mean, it's you got to put up a building, whatever's fixed. I mean, obviously, it just doesn't change. So all I do is just carry it down E13 right here, and then H13. See? There we go. H13. Then I'm going to obviously subtract that, but to get to our net income. But selling and general administrative 785. It's not really SG&A is really costs associated with the company that's not directly attributable to the units sold or the services sold. 785,116, and just basically carry it down from E14, and then here from H14, and do the same thing for depreciation. Just carried it down. Then what I did is I took EBIT, earnings before interest and taxes, very common, popular item in finance. Make sure you know how to calculate EBIT. And all I'm doing is taking my gross margin minus our fixed costs minus our SG&A and our depreciation, get to 3.9. Over here the same thing, I get to 4.2. Again, I'm just carrying these down. Okay. Notice there's no interest and no taxes. And that's why they call it earnings before interest and taxes. I do that, and I notice that while A has a better profit margin, B is more profitable and able to keep non-product or service expenses low, and in that case having lower earning or higher earnings before interest and taxes, low overhead basically, lower overhead. Okay. Now to get to our net income item, we have to actually just take out interest and expense and taxes, and in our problem, you'll be given the fact that we have a 37.5% tax rate. So let me show you that, just so you know I'm not making it up. See, tax rate 37.5. So all I did here was I carried down my interest expense 501, 501, just linked it, just like this. Then what I did is I took out my taxable income, which is EBIT minus interest expense, gives me my taxable income. Same thing over here. EBIT minus interest expense gives me taxable income. And I multiply that times 37.5%. That's my tax expense. And subtract my H28, which is going to be our taxable income, minus our taxes, gives me my net income. And net income for company B is definitely bigger. Now, operating cash flow, make sure you know this. I'm going to take our net income, add to it depreciation and interest. These are considered non-operating items, so we add it back. Depreciation is it's an intangible of sort, and it's expense, and it's not really cash flow in this period, so we add it back, and then we also add back interest because it's not operational. And we get a higher net operating higher operating cash flow for company A. So our answer to this question, highest gross margin, we said was A, right? For highest EBIT was B. For highest net income was B. And for highest operating cash flow, it's A. And that should be it for this lesson. This will be seen again on your final and other quizzes.